Ralph, let's kick it off with your background. Why don't you tell us about, where'd you start in the industry and kind of how'd you get to where you're at today?
Yeah, sure. So, I, like many other folks in the Web3 industry, got my start in traditional finance. I worked at some bulge-bracket banks out of school, Bear Stearns, JP Morgan, UBS, and then I spent the bulk of my time on the investment side on the buy side at in research and trading roles in TMT and biotech hedge funds. And so, those were very formative years in terms of my investment experience. What I noticed was there were many parallels in biotech and tech investing, high growth, high beta kind of sectors with very asymmetric risk reward profiles that really translated well into crypto investing. When I was at toward the end of my my TradFi career, I realized that in biotech, most startups fail. Almost 99% of them fail. Same could be said for parts of tech. Over 90% of drugs don't make it to commercial stage. But the few that make it have the potential to change people's lives, like really impact them and become multi-billion-dollar companies or protocols. And I kind of started to see a lot of the same parallels in the crypto universe. And it kind of just became a natural kind of transition for me.
Yeah, very cool. Maybe let's start. Let's dive into that a little bit. So, biotech investing. So, what kind of companies were you investing in? How'd you find them? Kind of give us the scoop on that side of things.
Yeah, sure. I worked with a bunch of talented group of research analysts and physician scientists who kind of did that hard work in looking at anything from early stage to commercial stage type companies. Kind of everyone's looking for that next sort of blockbuster drug, or that company that's been able to transition from sort of early stage to commercial stage and have sustainable revenues into the future. And that's kind of how you play it on the public side. And what we noticed in crypto was that everything was early stage, but they were public companies as well, which is quite rare, but actually happens quite often in the biotech world. There's tons of public companies that are very early stage, or they might not be in like phase 1 or phase 2 kind of clinical trials, and it's a really useful lens because you become inherently sort of skeptical and very discerning about kind of what these products can do, whether that's a drug undergoing clinical trials or a emerging technology that is crypto or any part of that crypto stack, really.
Very cool.
Yeah.
And it's actually interesting that you bring that up because why are so many companies in biotech, why are they public so early? Is it because they already kind of have to do a lot of the regulatory stuff like beforehand? It kind of gets them ready.
It's for the same reason as crypto companies, is because they can. Because there's a market, there's historically a robust capital market, and everyone is looking, because the risk reward profile is so asymmetric, right? Where a company that might only be a few $1 million in market cap or $20-50 million in market cap can become a $10 billion drug, which is kind of what we've seen with crypto, right? Whether it's the latest iteration of a smart contract platform, or the latest iteration of a DeFi protocol. It's really everyone's in search of that, and there's a lot of capital, kind of chasing these things, and so that's kind of why we're all here, and it's we're learning a lot about why things work and why things don't work. Usually it's some sort of like all the same reasons in both worlds, right? It's lack of product market fit, right? There's too many competitors, poor execution by management, they run out of cash. So lots of parallels, but the ones that make it all have kind of the same checkboxes, right? Really like visionary founder that has the ability to execute, and a novel technology that gets rewarded by the market.
Yeah, definitely. You mentioned obviously there are a lot of good parallels between traditional finance and what you got to learn with that lens. What were some things that were not obviously, front and center that you had to really think through and have a different mindset about as you kind of traversed into the digital asset space?
Oh yeah. Certainly culturally, was probably the biggest, was the most interesting and probably, most fun kind of transition. Yeah, it's, the energy is extremely different, in our world. Even today, I got into crypto in 2017. 8 years later, we still feel like we're all kind of in it together, right? Whereas in the traditional world, it's certainly a lot more cutthroat and competitive. But here, it feels like while there are many sort of competing protocols and lots of different managers and folks involved, everyone's still fighting the same fight. And it's a really nice feeling. Earlier we were talking about sort of conference season, and it's the vibe cannot be any more different than what you would see at a traditional finance conference, right? And so, and the great thing is, it's all coming our way, right? We've it's all for with the latest change in administration, all of that feels worthwhile.
Definitely. Yeah, the conference and I totally like you brought that up too. Yeah, the conference side of things and the community side of things is definitely one of the most like fun aspects about crypto. Make it very hard to go back to just like doing traditional work.
Oh, totally. And that's really, community is ultimately the differentiator, right? That's whether it's on the protocol side or on this sort of ecosystem side, we're all kind of in it for the same reasons, and because we all believe in something that our traditional friends are still kind of warming up to, and that's that sense of community. You can do well economically, but also in kind of a fair and equitable way.
100%. Before we get too into things, let's talk about. So what are you guys working on with Factor6? So you mentioned you left the biotech space, kind of, you saw opportunities kind of similar, sounds like, from biotech, where there's kind of an asymmetric bet. So talk to us about kind of that move into the crypto space and what you guys are really working on at Factor6.
Yeah, sure. So Factor6 is a investment manager focused on the Web3 ecosystem. What's unique about us is that we focus we take a fundamental view on individual projects and companies, and we express those through both digital and traditional assets. So not just tokens, but also public equities of companies that are either directly involved in crypto or adjacent to it. And it's interesting because historically, the equity side of things has been an under-researched and undercovered universe by the traditional finance folks. There's at least 50, probably 60 companies now, and growing by the day, that are in this space, that we think there's still very, very fertile ground for alpha generation. And the reason is, you have these folks, these research analysts at the bulge-bracket banks. Historically, they had to cover companies like Visa and MasterCard and PayPal, who now also have to cover Bitcoin miners and Coinbase. And that's a different world, right? And so inherently, the advantages are going to go to the folks who are sort of in the weeds, who are looking at on-chain analytics, who are living and breathing crypto every day. And that hopefully translates into some, verifiable edge as with regard to the public company stock price. And so that's kind of how we approach it. While we wear our traditional finance hats, we also put on our hoodies, and we think that our experience in the traditional world has enabled us to sort of better manage the risks and underwrite, some of these companies in the crypto world. Over time, we think folks will eventually adopt a fundamental view and look at revenues and cash flows and not just trade meme stocks all day. They still might, and they still will. But I think as more people come into the space, the worlds of TradFi and crypto will eventually merge, and hopefully we'll have been here for a while.
Absolutely. What are your thoughts, Ralph, on just the convergence of obviously every ETF narrative now, the various products that are coming out? I mean, what are your thoughts given the traditional lens and then obviously moving into digital assets, just from a strategy perspective?
Yeah, I think the ETFs were monumental in sort of inviting traditional finance back, right? Because you go back to 2022, and we had some brand name hedge funds, tech hedge funds that were kind of experimenting with crypto, either making private investments in individual protocols or owning tokens outright. And they all kind of got burned, right? 2 years ago, or 3 years ago. What the ETF has done has created a safe way for institutions to come back. We're seeing that. I know my peers in the TradFi world are actively now looking at equities that crypto-related equities. The ETF world is going to be expanding beyond just Bitcoin, Ethereum. Is our expectation, and we think it's going to ramp back up. I think we're going to move on from just sort of basis trading, where a lot of these TradFi funds have the basis trade on. It's quite popular, but I think people are going to start to adopt these things as legitimate instruments for investment. Bitcoin as digital gold is the clearest one, and as we get sort of more development on the tech side, we think Ethereum and Solana and those things will all kind of follow. And at some point, a tech fund doesn't have to just be, tech equities and a crypto fund doesn't have to be crypto. It'll just kind of become one.
Another asset.
Mm-hmm. Yeah, that makes, ETF, seems to be a pretty easy wrapper in terms of just putting crypto to like the traditional market. So in terms of like you just mentioned there, like converging, kind of how do you see these worlds converging over the next, 5 years?
Yeah, I think once we get legislation, done, whether that's a stablecoin bill or comprehensive market structure bill, which we hope will come over the next several months, that will make it sort of easier for folks, the traditional folks, to invest in our space, right? We think that if you remember, 2 years ago, we had the first evidence of sort of the Web2 companies experimenting with crypto. Sort of Starbucks had launched their NFT platform. Reddit had launched avatars, which are NFTs, and even Meta and Instagram had experimented with transferable kind of NFTs. We think that can happen again, but we need the we need the legislation in place to make it sort of safe and accredited for tech companies to do. And once we start seeing that, then it's going to be a light bulb moment again for traditional folks to invest. And this time with better guardrails, safer instruments. So we think it's going to be a really strong. But we want to give that time because I don't expect once we pass a market structure bill, I don't expect date 2.
Gonna have an overnight. What do you think? NFTs gonna be the big driver?
I have a special place in my heart for NFTs, but they may not be the big driver. Certainly not profile pics, but perhaps some sort of tokenization could be a big driver. I think the biggest driver is going to be stablecoins and payments, frankly.
What do you?
Because that's really.
Yeah, I was gonna say, what do you like most about stablecoins outside of the payment activity?
because anyone can use it and everyone will use it. I think the tangibility of it all is going to be a big light bulb moment for people, right? For AI, it was ChatGPT. AI has been around for a long
Right.
time, but it was until like everyone could use ChatGPT in their daily lives. At some point, people are going to realize that sending USDC is going to be way cheaper than sending this $25 wire from one place to another that takes a day, and you got to call the bank because there's a fraud alert and all this kind of stuff. So I think that's going to be the sort of light bulb moment for most people when they can actually move money around as quickly and as they're about to find out.
Yeah. Well, and it changes a lot of things, right, Ralph? Well, obviously the issues with the banks that we've had related to crypto, the friction and just settling activities from operational workflow perspective. So all that would change, obviously, to your point, from a stablecoin perspective, to be able to move almost instantaneously back and forth.
Apple, I just saw some type of announcement too that Apple's looking to integrate like wallets into phones.
Yeah.
Be a really cool, really cool way of just kind of making it easier for people.
That's right. And we need to see more of that. We need to make it like accessible. We can't have people writing down like their seed phrases and stuff like that, right? It needs to be as simple and frictionless as possible. So I'm fully expecting every bank to launch a stablecoin. Why not, right? It's just code. So why not just it's just code, and it's a revenue driver because banks can then reinvest kind of stablecoin proceeds into higher yielding treasuries. It's really just kind of a home run for any company with the ability to launch one.
Yeah, it always reminds me back just when the internet started, people would say, "Oh, I'm on this browser or that browser." It doesn't matter. It's as long as the rails work, right? That's all everybody cares about going forward.
Right. Right. And on that point, as long as the rails work, like it hopefully shouldn't matter, what blockchain it's being used on. Hopefully we're not talking about like the specific, this is on an L2, like this is an EVM, blah, blah, blah. The consumer should just know, I get to send $100 to Skylar and wherever you are, under a penny.
Yeah.
Yeah. Make it as simple as
Just, yep.
Easy. Why invest in crypto now?
I think it's become abundantly clear that you have an entire administration on your side. One of the things I was sort of skeptical into the last election was that whether President Trump was just kind of saying that he supports crypto for the votes. And to an extent, of course, that's true, but you have to be pleasantly surprised at how crypto forward this entire administration, not just the executive branch, but also both houses of Congress at pushing this agenda forward. And so a couple of months ago, I had written a blog post called the Crypto Avengers Assemble, and it certainly felt like that. And now we look like 3 months later, and they're all still kind of, pedal to the metal on this. We just had the other day, the DeFi broker rule rescinded, right? So that it's signed into law, right? So that's kind of the first like, that's not just an executive order, that's law, right? And so we're going to see that coming through, more of those instances coming through, and you just have to be, involved when the largest single market and most powerful government is sort of helping you, on helping the industry.
Yeah, on that point, yeah, it is pretty fascinating how fast things have turned around since January, right? That really hasn't really happened. You look in the past of something gets passed, legislation, slowly it gets adopted, but now we're like you said, full pedal to the metal, which is pretty exciting to see.
Yeah, that's right.
I think like you made a good point, Ralph, too. It's like I was also a little bit skeptical initially. I I was also hoping, like, I was like, oh, let's see like Kamala come on stage. Like, let's see these, let's really see everyone get involved. Like once Trump came into office, it seemed like he really put the right people around him. And especially that is especially beneficial for the crypto space.
Yeah, absolutely. And it's really hard to be bearish on the industry when you've got that kind of support. And the biggest milestones are sort of yet to come, right? They're like the stablecoin bill is not done yet, right? We might be looking at summer or something. Market structure bill is going to come after that, and so a good investor would want to position ahead of those things, right, and not after the fact. And that's sort of the way we're approaching it.
Yeah.
We want to be exposed to the themes that are going to be most tangible and top of mind and prevalent in the next few months.
Yeah. And also you got, I mean, half these assets are down 50%. I mean, what's it? Ethereum was down like 70% at one point.
Yeah, that's right. And so, and to that point, right? So, the market is worried about tariffs. It's worried about slowing growth. It's worried about, trade wars, etc. But the beauty about crypto is that it is very idiosyncratic in its sort of life cycle. Sure, it can trade as a growth asset, but ultimately there are things that can happen to crypto that are very specific to crypto, right? And that's kind of where we want to be. For example, like last year, AI was very idiosyncratic, right? That was the leader that captured everyone's attention and capital. And we think that, this is crypto's chance now.
Yeah. On that point, I guess talking about obviously AI is, we talked about it's been around forever. Generative AI, now combining that with crypto, what are your thoughts? I mean, that's obviously been a narrative for a long time, but with ChatGPT and everything's taken over, from a utility perspective, how do you see that interweaving into the fabric of crypto?
Yeah. The beauty about crypto investing is that it's multidisciplinary by nature, right? It's not just tokens. It kind of takes you all over the tech world. And what we found is that the crypto and AI have actually are very, very deeply intertwined. I'll give you an example. Bitcoin miners, right? These, historically, they're effectively sort of power companies that have a warehouse and cooling and power, right? And they run ASICs machines and that mine Bitcoin. With the advent of AI, these Bitcoin miners, many of them have found the economics to support AI infrastructure. So that is running NVIDIA H100s and Blackwells are actually more attractive than Bitcoin mining economics. So many of them are trying to sort of pivot to the AI world, and some are kind of running it concurrently. There'll be winners and losers of all this, like anything. But it's kind of interesting to see how, as just Bitcoiners, we are now deeply entrenched in understanding AI trends, because the companies that we invest in are sort of having to adapt. So yeah, the worlds are converging on that point. There's a few other examples, but that's probably the biggest shift that we've seen.
That's actually really interesting. On that front, are you? I mean, give us kind of the background on that. Like, could you use the same chips for mining as you can to support AI infrastructure? And do you, how do they do it in a financially like sound way? Whereas like, obviously AWS, whatever, Google Cloud have these huge warehouses. Could they compete?
So the answer on the mining part is no. Bitcoin ASICs are very, very specific towards solving the cryptographic problem. They're kind of like, if you look at like a Bitcoin like mining site, it's kind of like cheap and dirty looking. They're kind of just very, very rugged. Whereas for high performance computing, you've got $40,000 chips, these NVIDIA H100s and such, and they need to be in a very, very clean environment with lots of redundancy, right? Bitcoin mining doesn't necessarily need redundancy. It goes down, right? A lot of these miners are constantly shifting the amount of power that they use. But like AI infrastructure requires redundancies. It requires a strong like fiber connection to the internet, right? These things can't go down. Microsoft or Google can't afford to have their unstable connection. So yeah, the and the next point to that is that the capex required to build those kind of data centers are really, really intensive. And so a lot of these Bitcoin companies have either had to sort of tap into their HODL stash, right, to fund the expansion, or get kind of creative with sort of infrastructure financing. So it's really intensive to build this out. And I think a lot of them are kind of learning the hard way that building an AI data center is not the same as hooking up a few Bitcoin mining rigs.
A little bit different, right? Yeah.
Yeah.
Yeah, and with, I guess, on the second part of that question, could they compete effectively with these, large built out
They're actually going to be clients, right? So the way we see, this playing out is like, the Microsofts and Googles and Metas need so much power and so much infrastructure to fuel their AI ambitions that they have been looking toward contracting with Bitcoin miners, because they have access to power, and ideally it's at a site near sort of a major metropolitan area. And so it's the worlds are like continuing to converge because you have a Bitcoin miner that they worry about Bitcoin price, but they're also like talking to Meta and Google, and it's kind of a very interesting dynamic.
For sure. Yeah, definitely be interesting to see how that develops over time here.
Yep.
Going back to the conversation of you mentioned briefly tokenization. I know that's a big theme in the space. And obviously there's been a lot of changes. There's a lot of early adopters. Obviously taking your traditional finance lens like myself and Mike and kind of parlaying that into what we're looking at future state. There's still, it's still a long way to go. There's still not price discovery. There's not secondary markets yet from a global perspective, but where do you see that? I mean, or maybe there is still, I haven't seen much of it yet, but that's kind of where I see like what the drivers will be if you're looking to tokenize a fund, for example, from a manager point of view.
I agree with you. It's an interesting concept for sure. The second, I'm a little bit more skeptical on how secondary markets will develop for a lot of these things. Obviously, it entirely depends on the product that you're trying to tokenize. If it's a very, very specific fund, type of fund with a very specific strategy that caters to a small subset of people, then it might not always make sense. But the beauty is that the tokenization is actually just doesn't really cost that much money, right? It like this is just encoding it on blockchain. It's relatively low kind of overhead. So at the same time, while you shouldn't expect necessarily to see these things a super liquid secondary market. There could be other novel use cases where a tokenized stake in a fund or in other investment can be used as collateral for taking out a loan, something of that sort. I find it interesting. I find tokenization interesting especially with real estate investments. What if you ever do a real estate investment, whether it's commercial or multifamily housing, you're just constantly churning out deals, right? Like people are just like when an asset gets sold, you've got X amount of days to roll it to avoid tax, and so like you're just constantly churning out deals, and that can get very logistically kind of cumbersome for both like a fund manager and an investor. If you just kind of are just trying to roll your assets, then it's you can eliminate a lot of the paperwork and logistical kind of stuff by just having it represented on chain, right? And then you can use that for other purposes. So yeah, there are many interesting use cases, but real estate is probably the most tangible one that I can think of.
Yeah, definitely. It's exciting to see here.
Yeah.
What do you think in terms of like the next wave of tokenization? Is it real estate, or do you see other assets, potentially being better fits?
Everyone likes to talk about the tokenization of everything, and I'm like, why not? like, block space is so cheap, right? Transaction fees right now are so cheap, and they're effectively free, right? Depending on the chain you choose, that you might as well just try to tokenize, whatever fund assets you have, or it might be anything that people need to view, right? Anything that like a third party needs to view might as well get tokenized. I can see it in the traditional finance world, right? Where you're constantly having assets rehypothecated from bank to bank. You might have like complicated sort of like tri-party agreements where your collateral is sitting at a custody bank, but you want to borrow against it at your prime broker. I think that's a very, very clear use case for it, right? Where the economics of everything are going to be very clear to all these parties.
To your point, Ralph, when you get rid of the the manual paper process, like from a collateral point of view or lending point of view, that can just be executed via a smart contract based on certain levers, right, that happen based on that agreement. Well, then now you've avoided that manual back and forth, to your point.
Totally. Right. I remember from my bank days, working at a securities lending desk, you don't know where any of this stuff is. It's like all this technology is built on stuff from like it looks like the 80s and like early 90s, right? And you just see stock and assets and cash like moving around, and you're trying to like it's just so logical that this kind of technology can help kind of clear up the transparency problem.
Yeah, for sure.
Let's talk about fundamental research. What do you guys, how are you guys using fundamental research in crypto?
Yeah, that's a great question. What we're seeing and what we've noticed since, in our 3 years is that you can't fundamental research. And what I mean by that, I mean like, revenue. It doesn't just mean like revenue multiples and comparing like, price of sales versus one project versus the other, because you'll never get there from everything's going to screen expensive, right? But what you want to see is discernible traction. So that's key performance indicators. Is that, are people using it? What are the protocol growth numbers look like? Right, and that's just the starting point. You have to have some view that a project is making traction or will have traction, and that will someday translate into future revenues. But on a day-to-day basis, like they don't always trade on fundamentals, right? Like that might only be 5 to 10% of the picture on any given day. The rest of it is, obviously retail and sentiment and positioning and leverage, which is not dissimilar from the traditional finance world, right? Like in biotech, you can get the science right on a name, but guess what? Retail loves to trade biotech, and they have no, a lot of them don't have any idea what this, but it moves a lot, right? The charts look crazy, and so there's a lot of noise that you have to sift out, and so that's amplified even more in the crypto world, where you just have to, as a fundamental investor, the first step is to acknowledge that these things are early stage growth assets, and they will not trade on their fundamentals most of the time. Over a long period, they will, right? But in the short periods, whether it's hours, days, weeks, months, they might be completely dislocated from underlying fundamentals.
What does your process look like? Like how do you guys, how do you start by even identifying a project, and then what, how does that process evolve from there in terms of really diving in?
There's so many projects, right? There's like $20,000, 10 or 20,000 tokens 2 years ago, right?
Yeah.
Now we're looking at 50,000. Like you could launch a token. Anyone can launch a token, right? So you have to be extremely discerning about the technology and the founders. And so we try to focus on a theme generally. In the last year, it's been sort of AI, right? That's been the most sort of tangibles. AI and stablecoins and on-chain finance are sort of the ones where we've really focused in, and from there you can sort of narrow down what projects kind of look the most interesting. For us right now, stablecoins, as I mentioned, is really the most top of mind. And like any other investor in traditional finance, you always want to look toward catalysts that can help re-rate an investment, right? And so for stablecoins, it's legislation and adoption, right? And that way, and from there we can work backwards and drill down to what projects are most exposed to that. Who's going to benefit, right? I'll give an example. So right now, stablecoins market cap is around 233 billion. This time last year was like 130, 150. So that's huge growth, right? When you have a bill that could go into the 400, $500 billion range. So what are the projects that have either developing something who have been around, who are most likely to benefit to that? We kind of fall back to DeFi, right? DeFi is borrowing and lending, and who's going to benefit the most when there's more money floating around? It's borrowing and lending protocols, right? And so that's kind of, so we kind of marry that, top down of looking for, overarching themes and catalysts with the bottom up of now all of those protocols, who is best positioned to take advantage of it.
It's an interesting way to think about it. That's you're taking something like looking at the stable coins and you're saying, well, obviously where are these stable coins going to go? Yeah, it's an interesting approach. Is there, when it comes to other projects, like, are you guys looking at a lot of, I don't know, on-chain data, different things like that on the fundamental side?
Yeah, sure. We use on-chain data as one of our inputs into deciding whether something screens well from, like, does it screen cheap? Are revenues inflecting while price is going down? That to us could be just potentially dislocated, right? So it is certainly a key, but certainly with the miners, we're constantly looking at, like, sort of the health of the Bitcoin network. Where's difficulty trading? Where's overall network hash rate? All those things you're looking for to kind of help you develop a model and get a sense of where something screens on the spectrum of cheap to expensive.
On the Bitcoin side of things, is Bitcoin on-chain data interesting for you guys? Like, are you doing anything beyond trading spot Bitcoin?
Yeah, sure. We want to be, we want to understand the underlying network dynamics, because that directly impacts what miners have to do, and whatever miners do impacts Bitcoin price, right? So if miners aren't breaking even on their Bitcoin, or they become suddenly cash trapped, guess what? They're the biggest structural sellers of Bitcoin. They kind of have to, right? So it's a very interesting sort of dynamic. But at the same time, whether we like it or not, all of crypto is sort of still largely tied to Bitcoin price action, right? Not just altcoins, but also, the crypto companies themselves. And so, kind of at this stage in time, a lot of it still ties back to Bitcoin.
Yeah, 100%. There's still a lot of, I don't know if correlation's the right word, but there's correlation to some degree.
Oh yeah, for sure. I totally agree with that. But then, there are pockets when Bitcoin dominance goes down, then sort of you have the sort of alt season and things kind of then trade idiosyncratically and you get a lot of dispersion. Those are the most fun times in crypto. But yeah, most of the time we're going to be anchoring on sort of what the Bitcoin's doing.
Yeah. And actually, not to keep taking us down this rabbit hole, but it's interesting to me because I really like the Bitcoin dominance charts, one of my favorite charts. I've been myself, like, kind of waiting for it to get a little bit closer to the last peak. I want to say it's like 73%, give or take. How are you guys positioning around that?
Yeah, I mean, for now, we fully anticipate like Bitcoin dominance to be strong and get stronger, especially when gold's at its all-time highs, right? If Bitcoin is gonna do what we're telling people it's gonna do, then we should expect. Right now, there's been sort of dislocation between like the year's gold price and Bitcoin's kind of been languishing. We expect though that sort of those alligator jaws to narrow at some point, and we think that's to the upside on Bitcoin. So if Bitcoin goes up, then dominance more than likely is going to go up as well. And so yeah, that's I don't have price targets on things. I kind of just we'd like to look at things day by day and sort of invest what's in front of us. But yeah, it would surprise me to see Bitcoin, hit those past peaks, which I think is ultimately a good thing.
Yeah. And eventually roll back over into the altcoins.
That's right.
We'll see.
Yep.
What do you think, Ralph, from just kind of your perspective, what is most often misunderstood still current state based on market dynamics, or whatever you're kind of seeing it from your lens?
I think it has to do with the administration, really. I still think people don't realize how significant the impact is going to be with regard to the upcoming legislation. Right. It's kind of because a lot of people think, oh, okay, Trump got elected, crypto mooned and then it busted. But that's not, in the context of prior cycles, it's entirely normal to have these kinds of corrections. It's normal and expected. And so now that we have some more defined catalysts coming, because we kind of, after the election, we had the inauguration and we kind of entered a catalyst vacuum, right? And then it all kind of turned toward macro. But in the next few months, we will have catalysts once again, right? Whether that's stablecoin market structure, ETF launches, right? Hopefully that coincides with those ETF launches. That way it kind of becomes a reflexive loop where, oh, stablecoins, how can I get exposure to that? Oh, maybe it's the Solana. How can I buy that? That was the ETF, right? So there's a scenario where the back half of this year, all those things happen at the same time, which could, make for some very interesting kind of price dynamics.
Some fireworks.
Yeah,
absolutely.
In terms of digital assets, how do you still see it as a significant asymmetric opportunity?
Yes, but selectively. I think given that there are so many tokens, so many projects, it's just very, very difficult given the amount of capital that is coming in, which is still somewhat limited on the grand scale of things. It's really hard for everything to just moon at the same time. It's possible. It might be able to do that in very short windows. But we think more than ever, it's important to be highly selective in the best, highest quality projects and founders who are on the right side of this administration, frankly, right? And so we think that the capital will sort of rally around that subset of the universe. Now, will the random meme coin, 5x? Sure, of course, that's just kind of part of the game. But I think folks have to be extremely selective, and we still think very much that the risk reward is asymmetric, even at large cap sort of valuations.
And when it comes to kind of finding those right projects with, are there, I don't know how to ask this, are there different sectors that, you guys find more interesting? Or are there areas that you'd say kind of to warn people to maybe stay away from, kind of red flags, if you will?
Yeah. Yeah, sure. I am generally skeptical of DPIN. This is, but I'm sure people will be happy to disagree with me. But a lot of DPIN is very, very interesting and sort of gives me hope that the technology and tokenization is great and creates the right incentives for these projects, great capital raising tool for these projects. As an investor, it's a little bit more difficult. So for projects raising capital, it's great. But for the investor, I'm not sure that folks have really figured out the right sort of incentive kind of scheme, whereby a token is actually will generate sort of demand, because a lot of these deep in projects, tokens are generally used because they are used for capital raising or monetization by VCs, that the charts are kind of they just look like they bleed, right, indefinitely. And so no one has really been able to figure out yet how to create sort of a sink where these tokens can go in and accrue value. So that's where, like, I am super on board with the technology and super on board with the way with the concept, but as an investor, haven't found one that's been able to sustainably pull it off.
Yeah, that's interesting. Yeah, maybe give it a couple more years. We'll see some more opportunity in the space.
And it could be it could be something like that, right? If a protocol has been afraid to has been afraid to implement security-like characteristics because they couldn't, well, that can change, right? And so maybe in a few months or a year from now, they can feel free to start issuing a dividend, right, or some sort of like revenue share. So I'm not saying it's like by any means sort of dead. I actually think that they're got to have a window where they can sort of implement more security-like features that will then make it more interesting for future investors.
Definitely.
Yeah, and it seems to kind of correlate more with almost like the traditional markets, where you kind of, I mean, from some of the projects I've seen out there, not that I'm super deep in the deep inside of things, but more kind of cash flow that I guess maybe you don't see as much in crypto.
Right. And there's a lot of projects that make a lot of that. A lot of the DeFi protocols, these borrowing and lending protocols, they're making some fat spreads, right? Because of where rates are. And so those are interesting, right? Like that's another thing that gets misunderstood, that crypto projects are just sort of, magic internet money or what, but like they're legitimately, many are legitimately revenue generating. We just need more people to appreciate that.
Literally.
Real yields out there.
Yep.
Definitely alive and well.
Well, Ralph, I think this is a good place to start wrapping it up. Actually, before we do, what type of advice would you give for, an aspiring fund manager?
I would say everyone who enters crypto, the initial first few phase, initial phase is always one of extreme optimism. But crypto is it's liquid venture, and it can be extremely volatile. And so I would always say to be be skeptical when you approach things, and be thorough when you meet with protocol founders. It's always helpful to step outside of the crypto bubble too, which is take a break off crypto Twitter for a week and just reassess as to whether something makes fundamental sense or business sense. That doesn't mean you can't sort of invest and make money off things that are like more speculative, but it's a good way to just sort of benchmark valuations to where to the real world. So I highly advise a crypto Twitter break every now and then.
Good call. There you go.
Good advice.
Yeah.
Definitely. I find myself doom scrolling pretty frequently. So
yeah.
Awesome. Well, Ralph, this is it's been a pleasure. A lot of fun having you on the show. Where could people go to connect you and learn more about Factor6?
Yeah, sure. You can go to our website. It's Factor6 Capital. I'm on LinkedIn and on X at Ralph Factor number 6.
That's awesome. Well, appreciate the time, Ralph, and we'll make sure to include all that in the show notes as well. This has been a great conversation.